Ladies and gentlemen, I welcome you all to the H2 and FY24 post-earnings conference call of Solex Energy Limited. Today on the call from the management we have with us Mr. Chetan Shah, Chairman and Managing Director, Mr. Piyush Chanda, Executive Director, and Mr. Vipul Shah, Director. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also a reminder that this call is now being recorded. I would now request the management to briefly explain us about the business, performance highlights for the year and the half year went by, the growth plans and the vision for the coming year, post which we will open the floor for Q&A. Over to you, sir.
Okay, thank you very much, and hello to everyone, and very good afternoon to everybody. As introduced by Mr. Vinay, my name is Chetan Shah, and I have with me my colleague Vipul Bhai and Vipul Shah and Piyush Chanda. So basically, welcome to all of you for this session, and I'll just brief you about Solex and the business perspective of Solex. We are one of oldest company in solar business. It's almost 29 years now. We are into business. We started our journey as a thermal, and then got into the photovoltaic in 2007 with a small capacity. And now basically, we have a wonderful setup in Solex. That is a new factory at Surat. The total infrastructure of this factory is 4.5 gigawatt, out of which we are already operating one production line. Total, we are adding 4 production lines, out of which one production line is operational, and other lines now basically we are adding up. So basically this is a very highly documented and process controlled factory, which is accepted by the global leading players also for their OEM requirements in our facility. So we are proud to say that we are the only non-Chinese OEM company for the leading Chinese player outside China. Those who are they have certified us, and we are qualified to produce as per their quality standards and requirement. So we can say we are a professional OEM company. Apart from our own Solex brand, we do OEM for globally leading brands as well as many Indian brands as well. We are restricted because of we have signed NDA with them, so we cannot disclose their name in a public domain, but we do OEM for almost about 20 companies now, with their different requirement and different quality criteria. So we have in-house reliability test laboratory also, which is as per the standard IEC standards, which are the global standards. So we have, in India, we have a laboratory called UL, TUV. We have a similar kind of setup here for the in-house testing, where we do the reliability test for every batch of modules. And, that is how our products are certified. Our manufacturing facility has been certified by the global players. And we are in discussion with many other global leaders also. Last year, in fact, apart from our OEM business and Indian business, we have started export also to Europe, mainly Germany and Africa. That was the beginning for us. So we do qualify for export overseas customers, for the different country, like US. We do have all the certification, including CEC and UL. Our products are listed on CEC website also in US. So we are looking forward to have some beginning in the US market as well. Since the China, the US has put a sanction on import from China in USA. So there are a lot of opportunity which are opened up for the Indian module manufacturers. Many Chinese companies are having their facility in Southeast Asia, like Vietnam, Cambodia, Thailand, Malaysia. And the US, there are representation already made to the government, and US government is seriously thinking about putting on sanction to those countries also, because all the factories are owned by the Chinese owners in those countries, in Southeast Asian countries. So the India has major advantage on this. There was a talk in between, but then it has been clarified that they are not putting any sanction on Indian manufacturing. So I think there is a huge opportunity which has opened up for the Indian manufacturers in US, like the Solex has also is. So we are eyeing on, and we are working in this direction as well. So Europe, Africa is already started on board. US this year we are considering to have a breakthrough. And yes, of course, the way the India market is growing, the way the speed of the Indian market, the government is targeting almost about 30 gigawatt installation per annum, which is jumping from 15 gigawatt to 30 gigawatt. So there's a huge opportunity which has come up in India as well. And I'm looking forward to have, the better policy in terms of land acquisition and transmission, which the government has already, spoken in public domain. That there are a lot of policy changes which are anticipated after the forming of new government. So things will be easy for the Indian developers to set up their power plant for the captive use also, and for the third party sale as well. Apart from that, there are many government subsidized program which are already announced, like PM Suryagar, PM Kusum, and so that has opened up huge opportunity for within the country for the for the projects. So every project requires modules. So and since the ALLM is in place, these opportunities are opened up only for the Indian manufacturers. So I think now it is a matter of the capacity addition and how fast you ramp up your capacity and the efficiency. The benefits are already, well, the business is already lying in front of us, and then we need to capitalize on that. So Solex is geared up for that. And with that vision only, when we acquired a land here, for setting up our factory, it was keeping in mind that we want to go to the 4.5 gigawatt in this premises, and but of course we did not opt for that 4.5 gigawatt equipments in one shot because of the various political and geopolitical issues. But now I think the situation is such that we can on a fast track we can ramp up our capacity and reach to the 4.5 gigawatt, and then go for the further expansion in cell line and module line as well. We are equipped with all latest technology. So our production lines, even current line also is ready for P-type and N-type. Our upcoming production lines are also compatible with P-type, N-type TOPCon 16 bus bar, and the HJT technology. So which is not actually entered in India as of now. But I think within few months HJT will be in demand. N-type TOPCon and HJT will be in demand. So we are already ready to produce these modules as well. So we are quite flexible in terms of variety of product manufacturing in our facility, and there are various size of a product also. In fact, I would like to share that we are the first company to get enlisted in ALLM when it was launched in 2019. So, but somehow government delayed the implementation of ALLM, and finally from 1st of April it has been implemented. We have highest number of models listed in ALLM. So if you look at the ALLM list, Solex has the highest number of models, 249 models which are already listed in ALLM, which is highest in compared to any other listed entity on ALLM. So we understand the business very well. We know the product demand, the variety of product that. So what I'm trying to say is we are scalable. We can deliver. We can fulfill the requirement of any kind of project or any type of models, because when it comes to the PM Kusum water pumping projects, there is a requirement of the 500 watt peak modules. When it comes to the private captive projects, there is a requirement of 550 watt peak, or maybe when it comes to N-type TOPCon, there is a requirement of 580 watt peak modules. So Solex has capability to manufacture right from 400 watt peak to 580 watt peak modules. A complete full range of product that we have, all certified and all listed. So it is not that when we have an order, we look for certification or the listing of our product on with the respective government authorities. So our readiness is, we are watching market very closely. We know what is coming in after 3 months or maybe 6 months. That we follow, we keep a track of government tenders, what kind of tenders are coming, and what kind of modules requirement would be, and we keep ourselves ready. In fact, we have 600 people working in our organization, and we are proud to say that 60% of our manpower, they are from the they are the indigenous people. They come from the tribal belt, and the kind of skill development that we do for those having a ITI or diploma background, then we train them to run our fully automated plant, robotic plant, and in fact, and they are in true sense they are real our asset. So our factory is in a tribal belt, just outside Surat, and we have hired people from this area only. And in fact, the efficiency of these people that you have seen in past, that we have come up with so many milestones, that 60,000 modules in 1 month, and highest production in a day on a one production line, and so on. So I think the kind of efficiency that we work, then we focus in when we have a factory, we have to ensure that we work with the highest efficiency and the highest standards of quality, and the lowest wastage. So these are the key ingredient for any successful factory, and that is what we are focused, and we have achieved good numbers, and we are continuously improving on that. So yeah, so that is the Solex background, and because of our manufacturing scalability and OEM portfolio, I think Solex branded modules are also very well received in the Indian market as well as overseas market also, because the way the quality parameters that we have set up, the process control, the equipment control, the calibration level, which are highest. So the people are having trust in Solex branded modules as well, and we are increasing our ratio in our Indian market as well as overseas market also with the Solex branded module. So people are now bidding with our modules for the project size of 50 megawatt, 100 megawatt. They are incorporating Solex branded modules for their projects, and they are getting approvals from the government, various government authorities. So that is a good sign for us for the future, and that will definitely enhance our utilization of our capacity, and that will definitely help us to justify the expansion of our new production line in a very short period of time. So as I said, the cell line technology is also changing so fast right now. The P-type monoperk is a very popular. N-type TOPCon is also getting now popular. So we are seriously considering our future investment into cell line, and basically having a cell line is something where you can definitely have a better control on a value chain. In fact, I would like to share the opportunity for the cell line is India has almost about 10 gigawatt of DCR projects, where the cells also has to come from the Indian factories. That is a 10 gigawatt projects are already announced, which includes PM Surya Ghar, which includes the PM Surya Ghar Yojana itself is a 25 gigawatt. So the PM Surya Ghar, PM Kusum, whereas they have a water pumping projects and the ground mounted grid connected projects. So these projects basically requirement is almost about 10 gigawatt per annum for the module, against which the cell capacity in India is operational capacity, if I have to tell, it is hardly around 3 gigawatt. Though the nameplate capacities are more, but the operational capacity is 3 gigawatt. That means the cells available for the Indian factories are only 3 gigawatt against a demand of 10 gigawatt. So those who are there are many companies are now coming into the cell line. They will take their own time, but I think Solex has also better opportunity because Solex is already into the module business. So we can have a better captive requirement and the utilization of the cell line as well, since we can have a customer for cell as well as we can utilize the cell production for our own module factories. So I think we do have that advantage, and we realize that, and we want to go quickly into that business as well. So we have already started, internally we have started working on. We don't have, we don't have uh, timeline and numbers right now, but I think very soon, once we are ready with that, we will be able to introduce, inform everyone about our timeline and the investment and the other numbers. So currently, what we are focusing is a module, and the roadmap I have already explained. So I think that's it from my end. In case Vinay, in case if you want to add something or.
Sure. We'll open the floor for Q&A. We already have people waiting to ask questions.
Okay.
We'll start with Agastya. Agastya, you can go ahead.
Am I audible, Vinay?
Yes, yes.
Thank you very much for the opportunity. Thank you, Mr. Shah. Very nice explanation in the beginning itself. You touched upon most of the areas that I wanted to ask questions on. I'll just ask you to elaborate a few points. Starting with this US tariff, which has been imposed, you mentioned that you are already exporting, and there is obviously a lot of potential for Indian manufacturers. But can you quantify exactly what will happen and how things will pan out? Because as of now, there are so many variables in the industry. At one end, you have a lot of oversupply, and we have seen the international prices crapping out over the last 12 months, right? The module prices and the cell prices. So in light of that, so I was a bit surprised that if the solar and renewable sector is for the future, why are not governments utilizing these low prices to procure as much material from the international market as possible? I understand the geopolitical reasonings here, but I don't know. Is there a chance that the governments will change their mind, especially the Indian government? I mean, why will they not ask people to buy as much from the international market at throwaway prices?
Okay. Now, so basically, the international, the import was already there in India. Almost 90% of the total solar panel the consumed in India, 90% was coming from the foreign market, and particularly, majorly from China. So
Right.
that sin was already there. Just to safeguard, because energy is a core area, where the safeguarding of, the security, energy security in country is something which is very important. And that is the reason government always wanted to have development of domestic manufacturing. Now, if you look at the price point that you said, the low cost product, import of the low cost product in India. In fact, if you look at the last two tenders which has happened in Gujarat, in fact, the China company, they quoted higher, and the Indian companies quoted lower than Chinese price. So I think the India is also very competitive in terms of costing, and we are at par with the international pricing. Any country who is giving additional support for the export, or for the strategic financial assistance for exporting to a specific country, that is something which is inorganic. But otherwise, in a natural way, we are as competitive as manufacturing costs in China. And as a Solex, we have already quoted, we have already done a OEM for a Chinese factory, Chinese leading brand, top brand in the world. And they've also realized that we are very competitive in terms of cost, in terms of efficiency. Also, we are very good. At some point, we are better than their factories in China and Malaysia. So I think now those days are gone, where people wanted only low price. This thing, people want good quality product also. Of course, I don't say those imported products were not good quality. They were also, those products which are coming from the high brand, they were also of good quality. And in fact, they lead the technology. So basically, there is a lot to learn for the Indian manufacturer from them in terms of technology, in terms of efficiency. But I think now, considering the price, even the India is also selling at a very, very competitive price, in spite of paying a duty on a raw material. The Indian panels are quite affordable for all the projects owners. And because of this price advantage, in fact, there are, and the increase in the electricity cost. In fact, there is a huge demand which has arisen from the captive users. So one is that the third party cell, that you bid a government tender, and then you set up a gigawatts or megawatt or gigawatt scale projects and sell the electricity to the government. One. Another is a captive, which is in the range of anything from 5 megawatt to 50 megawatt. So that number has increased in India. So I think there is a huge demand. It's almost about 8 gigawatt per annum is Indian captive user requirement. So apart from that PM Suryagar, apart from PM Kusum, utility scale, grid connected, water pump, and this is another sector where it is a cash and carry kind of business, where people want Indian modules and they are happy with the Indian modules, and which is peak also. Like, you are not paying in USD, you are paying in INR. So which is giving them a better advantage over this thing, because there is always a rupee is always, it's constantly getting depreciated, and you end up paying more money than what you anticipated. So I think my answer to your question is, Indian modules are also equally competitive, so there is no reason to continue with the import of modules in India. And when it comes to the Indian demand, currently the kind of capacity that India has, and the people have already ramped up. A lot of companies are under their certification process. So maybe in 2 months, 3 months time, people will have a certificate for the N-type product. So I think that has opened up, apart from Indian market, the US market. So I was just mentioning about the US market. US has basically, 50 gigawatt requirement per annum. More than 50 gigawatt, in fact, but since last 1 year that we have observed that the consumption has little bit decreased because of various political reasons. But now, in fact, it will go up to 100 gigawatt per annum. So I think if you look at the expansion of a manufacturing in USA, but at the same time, the Indian cost is also very competitive. So it is always good to manufacture in India and export to USA than manufacturing in USA. The US manufacturing cost is very high. So that is again subsidized if you are buying a US product. So subsidy won't sustain so long. So in long run, India has a better advantage in terms of the thing and the consistency in pricing. Yeah.
Great, sir. Great. So my second, sorry, sir.
One more thing which I like to add, like you said that why government will how long will the ALM continue, or how much protection will continue. So one major reason, like Chetan said, we got ALM registered in 2019, and finally government introduced ALM this year from 1st April 2024. The reason was India was not having the capacity. So now we have sufficient capacity. So like as Chetan said, the main focus of the government was the energy requirement. So previously, if you say, the EPC companies had an upper say, and so ALM was not introduced. But now government is confident that we have sufficient capacity installed in the country, which can cater to the requirements of the domestic market, and that's the reason why ALM has introduced. And I think so it can. We don't see that there is any chance for government to go back on ALM.
So adding to this, on ALM front. In fact, currently in India, the installed capacity, the nameplate capacity is 60 gigawatt, out of which 43 gigawatt is already listed in ALM. So which is official numbers, right? So, and the way the people are expanding their capacity, I think by end of 2025 or maybe the mid of 2026, India will reach nameplate capacity of 100 gigawatt of modules. So, I think if you consider the realistic capacity, and if you put only the 65 to 70% of the realization of that capacity, so then also India can fulfill the requirement of own country as well as the whole US. So I think we have a better advantages compared to this thing. At the same time, now Europe is also going on the similar line of US, and they have been talking for almost 1.5 years. So now they are about to maybe 3 months they will realize implement this. So India will have another opportunity from the European segment. Yeah. Okay.
Great, sir. So my second question is related to your finances. यहाँ पे sir, the problem that I've been facing in analyzing the company is that I don't have the capacity utilization numbers. And I can't really figure out your costing properly because you are growing so fast, and I'm pretty sure even the operational line is not fully utilized as of now. So I have two sub questions here. One is your capacity utilization numbers for the first half and second half. Second, for the coming year, can you guide us towards some kind of average realization per watt that we should be taking? And what kind of effective capacity will you have for this year, given that second line will come tentatively in the second half? So, if you can give some sort of a guidance there, and hence, what kind of EBITDA margins we can see. I'm more interested in your, like, when you are when you are producing 1.5 gigawatts, what kind of EBITDA margins can you reach, like 11-12%? That is the question.
So, first thing you need to understand is, the nameplate capacity and the actual capacity. So when you speak of the nameplate capacity, the industry speaks of the maximum capacity of module which can be manufactured. So like the current plant what we have that can manufacture up modules up to 750 watt peaks. But 750 watt peaks is not acceptable in the market. The current the modules in demand are 540, 550 watt peak of modules. So
Okay.
if you want to understand from the industry per se, you rather than going directly with the nameplate capacity, you should go for the number of modules what we manufacture.
Okay.
For Solex, average what we project is 50,000 modules per month. So
Okay.
this is an average what, like we have gone up to 60,000 also in 1 month. That was the highest of this. So when it comes to 50,000 modules per month, we say we are operating 3 shifts and with almost 28 days.
30 days.
Okay.
So when you speak of capacity utilization, with the install, we can say we are operating at 80-90% of the capacity what we can which is the achievable capacity for the industry. And
Okay, so this is for H2. If I look at H2 number, that is 80% of your existing capacity being utilized.
Yes, 80-90% you can say. And last
80-90%.
September, October onwards, average we are manufacturing 50,000, around 50,000 plus modules. And the decision to ramp up the capacity. So we were looking for that. We wanted to reach 3 months of the full utilization, and we were successfully being able to achieve it. And now we have placed orders for the new line.
Okay, what kind of realization we can assume for next year?
Next year, what we are targeting is full year of the current line and 4 months of the new line.
Okay.
And with we are targeting roughly 80-85,000 modules per month for the new line and 50,000 modules for the current line. And so first, this 24-25, we are targeting a turnover of 800 to 900 crores, which includes EPC business of 100 crores. And with the full year of operation, maybe if you consider full 12 months of operation of both the lines, we target 1,300 to 1,400 crores of turnover, which will not include any EPC business because we have started one new EPC company. Henceforth, once the company is operational, the EPC business will go to the subsidiary company.
And you can do double-digit EBITDA margins here. Can you reach 12-13% at full utilization?
We are being conservative. See, like you need to understand the industry. When you want to achieve maximum capacity utilization, you always have to keep a balance of own brand and OEM. So those people who are concentrate more on own brand only, they are not being able to reach to this capacity utilization. So, our concept is global factory. Chetan Bhai is always he keeps on saying and boosting that we are a global factory. So we don't mind manufacturing even for our competitors also. In fact, that endorses our brand more, because whatever panel we manufacture for OEM also, there it is mentioned that it is manufactured by Solex. So whenever end user, maybe the EPC, the B2B, B2C, so in fact they are our brand ambassadors. So our competitors also are promoting our brand. So the EBITDA margin, what we are focusing is anything between 9 to 11%.
9 to 11%. Okay, great. I'll go back in queue, sir. I have too many questions, but there are other people in the queue. So thank you very much.
Thanks, Agastya. We'll go to the next participant, Nikhil Chandak. Nikhil, you can go ahead, please.
Yeah, thanks. It's a follow-up to the earlier question. Just to be sure, for fiscal 25, you are saying your revenue target is somewhere in the range of 800 to 900 crores. So is that understanding right?
Yes.
Okay. For an EBITDA margin between 9 to 11%.
Yes.
Okay. I mean, this is a very sharp expansion in EBITDA margin, right? You ended the year somewhere at 7.5. In fact, that's a big concern, right? For the entire sector. Everybody is expanding, but the margin profile is so weak. Your EBITDA margins don't cross 7-8%. The PAT margins after everything becomes like 2-3%. So how confident are you that this EBITDA margin from 7-ish will move to 9-10%? And what will lead to that, expansion?
If you see, we are at 7.76%. And with the expansion and full year of operation of the enhanced capacity also, last 6 months we've been able to achieve 80-90% of our capacity utilization. So when you discount it, when you cover it for the entire 12 months, so that is going to help us to improve the EBITDA margin. Plus, as the Solex brand acceptability is increasing in the market. So as and when the percentage of Solex own brand will increase, it will help us in. So that's why we have kept it 9 to 11. So it will all depend upon how much hard we can push Solex own brand also. At the same time, we have to balance the capacity utilization also. But we are comfortable that I think so 9 is a comfortable number for us.
So basically adding to what Vipulbhai said, in fact, kind of infrastructure that we have, which is called 4.5 gigawatt, and we have a fixed cost also in terms of infrastructure. We have a manpower also, the senior leadership team and all. So basically currently we produce 50,000 modules a month, and with the same infrastructure and with a little addition of manpower, we will produce 135,000 modules. So that will be the factor for the improving our EBITDA margin of this. So there are many such factors.
And this expansion up to 4.5, that will be, what is the target? By when does it get done to 4.5 gigawatt?
We will like to inform, from day one, we had land ready for 4.5 gigawatt. Building, we had done ready for 2 lines from day one. So like for 1.5 gigawatt. Now we have started construction for the another 3 lines. 3 gigawatt. So construction, we feel before rains, will come out from the grounds, and maybe 6 months or 9 months maximum, the new factory will be ready for the installation of 3 gigawatt also. So this is the preparedness. So no, but obviously you have seen we have been very conservative when it comes to expansion. If you see, we were ready with this building since last 2 years, but when we started our actual production, the first line. So we are very conservative when it comes to expansion, and it is governed more by the business dynamics than rather than the expectation of the market or the other stakeholders. So the preparedness is like the building is getting ready within 8 to 9 months. We'll be having the building and infrastructure ready for installation of 3 gigawatt. So I think so. This gives how ready we are for the third round of expansion.
Understood. And one last question, right? So you mentioned about a lot of expansion happening in the industry, and say the industry reaching a capacity of 100 gigawatt in the next 1 year. Now the question is, are we staring at a risk of overcapacity in the domestic market? I understand the big targets are there, and annually X percentage, X gigawatt has to be added, and so on and so forth. So we're well aware of the larger industry, what the target is. But it may not happen annually. It may take a few years for the industry to kind of reach those kind of targets. In the interim, aren't we staring at an overcapacity situation?
This expansion is not happening considering only Indian market. So basically, as I said, the US is one of the very big. The Europe is coming in. They are again coming back. I mean, they are the leaders in terms of adoption of a renewable.
So sorry to interrupt. So out of this 100, how much would we cater to the domestic market, and how much exports you think, rough cut?
So first thing, 100 is the nameplate capacity. So first thing, you cannot take it as the actual production. So that will give you a big understanding. So when you talk of 100 gigawatt of the nameplate capacity, the actual utilization is how much you can.
So basically, the actual output will be on a higher side. It will be 70 gigawatt. Out of 70 gigawatt, India will have anything between 25 to 30 gigawatt, and rest will go to US. US has the opportunity for almost 100 gigawatt, out of which even if India gets a 40% share in initial years, then it is almost about 40 gigawatt, which will go to US. Europe will have somewhere about 5 to 8 gigawatt market share for Indian models.
Africa, we have not considered.
We are not counting Africa and Middle East.
Sure. No, but there'll be other countries as well, right? It won't be only India exporting to the world.
Yeah, so that is I'm just counting countries where there is a sanction on other countries.
Perfect. Great. Thank you so much. Thank you.
The China and Southeast Africa, they have a sanction, and that is the reason we are counting those countries only.
Sure. Thanks.
Thank you, Nikhil. Before we go to the next participant, I'll take one question from the chat. The question is from Manish. His questions are: first, how much EPC order book the company has on 31st March 2024?
Okay.
Order book, are you talking about order book or last year billing?
Order book. He's also asked about last year billing as well.
Okay. So last year we did around 50 CR from EPC business. And as on 31st March, in fact, this year, even the current year, we are having an order book of almost about 12 CRs plus 11, so around 25 CR.
Okay. His third question is what is the vision of the company in terms of revenue for FY25? And kindly provide breakup of revenue expected for FY25 in terms of EPC work and solar panels separately.
So, like as we said, for 24-25, we have targeted revenue between 800 to 900 crores, and out of which 100 will be from EPC. We target we have a target of 200, around 200 crore for EPC. But since we are starting the new company, new EPC subsidiary company, so in Solex, the holding company, we target of 100 crores of EPC business.
Okay. We'll take the next question from Aditi Kaspekar. Aditi, you can go ahead.
Hi, can you guys hear me?
Yes.
Yes.
Thanks for the opportunity, sir. So my question pertains to, a couple of things. One is, I have a bunch of questions, but let me just take up like a couple of them upfront and then I'll go back in queue. So the first question is with respect to, when we are talking about this expansion, how much will be the capex required for this in terms of I'm not talking about the cell line. I'm just saying that if we have to go, because you said that, 3 gigawatt is what we are targeting to get by, say, the next 9 months in terms of installation. So what will be the capex requirement? Because as I understand, sir, currently our total borrowings are already about 96 crores, if I'm not wrong. I mean, that might be the gross number. So you can tell me what the net debt number is, probably somewhere around 85 crores. But, how do we plan to then meet these requirements of capex? Because right now we are at 650 megawatt, right? And going from here to 3 gigawatt in as short as, say, 9 months to 12 months, what is the amount of capex required and how do we wish to fund it? That's my first question.
So, I think the first thing, out of 96 crores of total debt you are saying, the term exposure is only around 40 crores. So, rest is the working capital. Now, the second expansion, what we are doing is for the second line, that is around 70 to 75 crores. And if it's in public domain, like we are raising additional capital of almost 72 crores. And the rest will be, we'll balance it with the bank debt. This, we are speaking about the second expansion. when it comes to 3 gigawatt, then with the exact the average cost for 3 gigawatt.
Yeah, so the 3 gigawatt will have 270 CR capex requirement.
And so for that, again, we'll have it as a balance of raising additional equity and a balance of bank debt. So fortunately, we like to inform that we are getting very good response from the investors. In fact, we had to curtail we had a lot of people who were willing to participate in the preference allotment of. But we have selected. We're looking into the long term what value addition they can have. So we are very much sure that the decision of keeping it balance of equity and debt will be keeping that and will be more. So we don't see, we have a very good relationship with the our existing bankers also, and investors have also shown keen interest. So it will be a balance of debt and equity.
So just to support the statement here, like, we are, in fact, we always look for the value addition, not only the fund. So in our recent fundraise exercise, Farooq Patel from KP Group has invested. So basically, I mean, it is not just investment which is coming. We are in a discussion for their module requirement as well. So
it's a strategic,
the tying up that we are doing, so that it is along with the fund, basically, there is interest in a company from the investors in terms of the capacity utilization, the production utilization, and everything.
Plus, a lot of people, they are again interested in booking the capacity, some specific numbers with some commitment for investment also. So it is in the discussion stage, and we have NDAs and all these things. So we have some big corporates or big guys who are interested in doing long term contracts along with some commitment in equity or some advance payments also. So a lot of things are under discussions, and finally we take a decision looking on the
which direction we should take for the fundraise. Yeah.
Understood. So if I have to summarize, then what you're saying is that 96 crore current debt, out of which only 40 crore is term. And you're saying that for the second line, you will need 70 to 75 crore, which will be a combination of debt and equity. And you've already announced that you will be raising 72 crores through equity dilution. And then you said that for 3 gigawatts, you will need 270 crore of capex. Is that the correct understanding?
Yes, that's very true.
Okay, so that 270 actually includes the 70 to 75. So the incremental is only 200, or is 270
No. It is 270 plus 75.
Okay, understood. And that time you will have to again raise equity. Understood. So the other question I had was with respect to, somebody has already asked that question earlier. So it's a follow-up to that. Basically, you mentioned that, from October onwards, you've been making somewhere at the run rate of 50,000 modules per month. And if we take your second half numbers, then they have about 272 crores of sales. So which means that you've been 50,000 modules is translating into somewhere around 45 to 50 crores of sales. So what's the split currently between OEM and own brand? And how should we think about realization accounting on OEM front and on own brands front?
So like now we are on average it will be 70% of OEM and 30% of Solex own brand.
Okay. Understood. I'll come back in queue, sir. Thank you for this explanation.
One more thing I like to add, I create value for all of them. Like, our target is to utilize the capacity to the fullest level. So generally by and large what we do is like at present we have completely booked our capacity for June and almost for July. So what we do is we see what orders we have for Solex brand, and if there is any shortfall, immediately we have so much connects in the market that we will able to get OEM business. So we have a target to reach 70-30. It may go to 40-60, it may go to 50-50, but the main objective is utilization of capacity.
So basically, till 2019, in India, the utilization of capacity was a big problem, and none of the factories achieved more than 50% capacity utilization. And the major factor was the import from China. So 90% getting import from China, and then the rest of the production was happening in India. Now, basically, that capacity utilization has gone up and it has increased substantially. What is happening? There are so many companies having older technology still, because they cannot discard the technology so fast, their equipment, and then reinvest in those machines. Solex has advantage over it because when we started in 2021, the approach was very clear that India needs to change the approach towards the manufacturing. And basically, I keep a track of the leading brands coming from China. How they manage, how they control the whole market, how they control the manufacturing, how they can reach a single company. Whereas in India, if you put everyone together, we have just reached to 60 gigawatt. So basically, mine's very clear. When you have a factory, we should treat it as a factory. So the factory means it has to run 24/7, and we have to stay ahead in terms of the technology curve. And that is a Solex philosophy. And that's the reason we work for the leading brands so that we do have, they always keep pressing us to stay ahead in a technology curve. They always keep us under pressure to reach to the highest level of quality standards and the lowest level of the rejections ratio. So that is actually helping us to improvise our own brand. And as I already said in my preface, that the Solex modules are getting popular now in India. And in fact, now we do have a good numbers also, where in South also we do have 2 projects already operational, 10 megawatt each. And then we have closed other orders. We are in a discussion to close other orders also. So I think this mix and match is something which is very important for Solex to always stay ahead in terms of quality, technology, and the rest of the parameters over the competitors.
Got it, sir. So just the 70-30 mix that you mentioned between OEM and own brands, that is on volume count. So you said 50,000 modules. You're saying 70% of 50,000 modules are OEM currently, or are you saying that that mix applies to the sales number as well?
Modules, you can say.
Modules, okay. And what would that mix, what would that split be on the sales number of, say, the run rate of 45 crores per month?
So, actually, you'll have to see numbers. So, when it comes, you want it in terms of monthly?
Yeah, I'm just taking an average of 45 crores, sir. I don't want like a precise monthly. I'm just trying to get, like out of the 50,000 modules.
Average, 45, 70%. So you consider 30, 31, like that. So, like, like when it comes to OEM, the average price, because when they are DCR modules, the realization is average around 9,000. And when they are non-DCR, the average realization is 7,500.
So out of 45, it is around 31 to 32 CRR from OEMs, and rest is 13 CR coming from Solex.
Understood. And the realizations are 9,000 and 7,500 respectively. And I guess your margins will be sort of agnostic because it's effectively a capacity utilization and operating leverage game once it drops to a margin level.
Okay. Yeah. Any other
questions? Go to the next participant. Yeah. We'll take the next question from Keval Asha. Keval, you can go ahead, please.
Thanks for the opportunity. Major of my questions are covered by previous participants. I've just got 2 questions. One is, what's the realization difference between US and India market? If you can please throw some light.
So realization difference between US and because the US market is also very competitive, and the logistic cost from India to US is also very high. But when it comes to the realization, I think there is a difference of around 10% on the higher side between India and US.
Understood. And what would be our domestic versus exports mix in FY24?
FY24, it was just a beginning for us.
All right.
So, I mean, in terms of percentage, like, I mean, we can't count it. It is just a beginning that we have been able to open it up. Now, this has become a reference for us to sell more in those market.
Understood,
So,
sir.
like we like to mention, like we have got certification for all the markets. US, then California, they have a set different requirement. Europe, we have got all the certification done. Plus, we are participating in almost all the international exhibitions. So in Europe, like Germany, we have done. US, we have done. China. So we are increasing our presence, and we are very much sure that. But on terms of numbers, I don't think so. We'll be able to comment on how much exports we are targeting in 24-25.
Understood. But slowly we're building our exports business as well.
So ultimate goal is to reach to 30%. So that is how we are working.
Understood, sir. And sir, last question. So now, since we're considering a significant expansion, which we were earlier not, even though the buildings were ready, so we would have some certain visibility. So are we considering to do a long-term tie-up also with large OEMs who can book our full lines? Are we in any discussions?
Yes, we are in a discussion with quite a few companies, including the top brands as well. And those top brands, they have already seen our performance in last year working with one of leading Chinese brand. So now, in fact, we are in a good book for those people, fortunately. So we are in a very advanced stage of discussion with few companies for the long-term arrangement for the manufacturing their product in our facility, and the technology tie-up as well. So with the Indian developers and Indian manufacturers that we are already working with them. The Indian developers, there are certain developers, they are already having an order book of anything from 5 to 8 gigawatt. And they want to finish those 5 to 8 gigawatt in 2 or 3 years time. So basically they are looking for dedicated production lines with us, for to fulfill their module requirement. There are certain requests with us where they need a separate factory to produce their modules. So, there are a lot of mix of discussion which are going on, and based on the opportunity and the conditions, we will proceed further on this.
Understood. Thank you and all the best. Thanks.
Thanks, Keval. We'll take the next question from Karan Sanwal. Karan, please go ahead.
Yeah, am I audible?
Yes.
Yeah, sir, congratulations for a good set of numbers. Wanted to understand, like, what would be the concentration of revenue in our books for top 5 or top 10 clients?
Like, see, concentration, it all depends on how big this industry governs upon the big size, or if you have to reach to big numbers and with big capacity. So, like, there is no fix. So every time a EPC big company gets specific orders, they float their requirement in the market, and whosoever has a ready capacity and will be able to meet their prices, and so you can get the order. But there is not, like, you cannot say specific, like we are dependent on one particular EPC company or one particular buyer. So it keeps on changing. So quarter on quarter, you will see this quarter the major business for particular company. Next quarter, it may be from entirely a different person.
So we have to do a little smart business, and because still there are a lot of controls from the government end on a projects. So basically, sometimes what happens, like you have locked up your production capacity with one company, and any situation which arises with that company and their project get delayed. So in solar, it's not like that you go to some other person very next day and then get your production orders, because you have to work on a supply chain, their BOM, their quality requirement and everything. So basically we work in advance. Like at present, I have already finished my June and July. I mean, June was already closed last month, but the July production, we are closing. Within maybe this week only, we'll close the order for the July as well. And then we will open up our August order book. So it's like that. So sometimes what happens, like the customer, like what people buy said, like, there are orders that they want for 12 months fixed quantity, but then we go every quarter. We revise cost and the volume both every quarter with them. And sometimes if there is opportunity, better opportunity that we get, then we divert more attention towards the better opportunity.
Understood. That's very helpful. And also wanted to understand like what would be the targeted mix for this OEM and our own brand? Like, do we have any target, or would it depend on more of the demand for the brand?
So currently, as we have said, currently we are 70% OEM, 30% Solex. Now, since the Solex brand is getting popular, our target is to reach 50-50. So after getting, second production line, operational second production line, we will be able to achieve 50-50 numbers for both Solex and OEM.
That is a desirable, what we desire to reach.
Correct, correct. And one last question. So there was a news of possibility of some Chinese facility to get approval under ALMM. So would that affect us going forward? Like if they are able to get the approval, would we be getting orders on behalf of those Chinese facilities?
Yeah, so basically, we are in a very close contact with the government, MNRE, and NICE and all. So basically, we don't see. I mean, there are just to remain show as a neutral. The NICE has visited couple of facility in China, but then it was just a visit. There was no audit which was conducted, and the government has no plan to add any foreign company in ALM. But yes, definitely there are representations where the foreign brand, they will allow foreign brands with the Indian factories. And that is where the Solex has a better advantage, because we have already worked with those foreign brands. So the concept is, you want to sell in India, you have to manufacture in India. That is how it is.
Thank you so much. Understood. All the very best.
We'll go to the next participant, Devra. Devra, you can go ahead, please.
Yes. Hi, sir. So sir, I had a question on the cell line, and was just the thing is that most of the Indian players, if you think about it, including the biggies, they have not been able to successfully deliver on a cell line so far. Like even I believe Wari is facing some issues, and people, all the other module guys are also wanting to set up cell lines. So how easy or difficult is it going to be to do this? And sir, in terms of investment, like the kind of investment that is required, uh, over how many years can one expect to recover that investment out here? And will this bring more stability into the business and the margins? Because so far, what we have been seeing is that cell prices fluctuate a lot, and that kind of the margin profile is very erratic. So what are your comments on these?
Okay, so for the cell line, you are right. I mean, it is very tricky, and the technology also changing so fast. And the people who are facing issues to set up their cell line, and which is causing them a lot of time delay, it is major factor is that Chinese engineers are unable to travel to India. That is the major factor, because the China has expertise on these technologies. So it is essential to have Chinese engineers to come and help in setting up the production line, ramping it up, run it for a few months, and then hand it over. That is how, and the technology, when it comes to the equipment and technology and all, the majority of that is coming from China. That is the accepted facts for all. So now, basically, the projects which are suffering, even the PLI is suffering because of that only. And the government has already realized that. In our last meeting with MNRE minister, he has already told us to, give them a list of engineers, Chinese engineers, those who wants to come to set up this plant to them so that they can take it up with the Ministry of Foreign Affairs for issuance of visa. So basically, after this month, that is from July onwards, I think we are looking forward to have the change. That currently no Chinese engineers are getting visa, and then from July we are likely to get few technicians to come and help setting up those units. So basically, we are holding it just because of that. Because you rightly asked, if that is not happening, then I think we are still not ready for cell line, and the Solex will also act accordingly. So cell line is definitely a future, but then we have to consider the correctness, because you are absolutely right, Devrat, that if we don't work efficiently, like any setting up time is around 24 months in India. The Chinese, they do it in 18 months. Like if you consider the greenfield project from 0 day to the beginning of a production, and another 3 months for the ramping up the efficiency. Now, if you don't achieve those numbers, because the technology is changing so fast, if you don't achieve those that kind of efficiency in India, then I think it is risky, and that is the reason we are also holding it, and we are waiting for right time.
So Devrat, I like to add on, like when it comes to margin, if you are aware, DCR cells are sold at a very huge price.
16 cents.
16 cents. Like when Chinese are being the Chinese cells with the
4 cents.
4 cents, and the DCR cells are being sold at 16. So margin is clear. It has an extraordinary margin. So your concern with regards to margin is not of worry. The main question is the technology and the engineers. And why as Solex, we have been discussing with some big players in China who are ready to have some understanding with us, and they'll support us with terms of technology and a lot of things. And that's the reason why we are targeting cell line also. We like to add, when we installed our module line, some of our players, they took 9 months to install the module line because of COVID and all these things. And Solex, we could do it in 45 days. So same thing what we are seeing, like by the time Solex orders and our machines arrive, maybe 4 or 5 plants will be installed in India. So the experiment will not happen with Solex. The experiment part will already be over, and I think so we'll be in much better position.
Okay, and so how does how does this work? Because if we still look at it, India still relies on most of its raw materials coming in from China, and in fact, what are we doing to kind of try to locally source this? Are there other companies coming up that are making the parts? Like, how much of our material are we trying to source from India versus China, and what's our shift? Are we shifting towards mostly sourcing from India, or are we still reliant on Chinese exports?
Oh, that's a good question, Devrat. In fact, now, the Indian Indian manufacturing has increased a lot for the BOM. So, which is like, glass, there are multiple manufacturers. Till now, we had only one glass manufacturer, Borosil. Now, there are 3 others, and 2 more are coming up. When it comes to EVA back and backsheet, there are 24 manufacturers, EVA manufacturers in India, which was hardly one earlier. So when it comes to junction box, yes, junction box is, India is one of the, there are 3 manufacturers of junction box in India, and one is one of the top tier junction box manufacturer worldwide. When it comes to aluminium, Visakha is already manufacturing aluminum. Other people are also getting into this. So I think the raw material and the cells also, the people are adding their cell production lines. Of course, currently the majority of cells are coming from China. And once we have sufficient cell lines, the already investments are already happened. So it is not that it will not happen. It will happen. Maybe because of some political reasons, it is getting delayed, but it is happening. Many of them are already received their equipment. Now it is just matter of how fast they install it or make it operational. So I think India is getting independent in this thing. In one of our last meeting, MNRE has already given the indication that they want wafer ingot and wafer manufacturing to happen in India, because right now there is 100% control of China on this wafer and ingot. So India, maybe they will come up with some PLI for ingot and wafer manufacturing. So they are supporting this, because the polysilicon you will get from other countries. It is not that China has a monopoly. But wafer and ingot, yes, China has a monopoly. I mean, the major share is coming from there. So I think India is considering that part as well. So I think that is the reason I said, like, a lot of things are happening, not only in module, the other ecosystem also is getting developed, and that will give a better advantage. In fact, the benefit of this is, like, we don't have to spend 1 month in a sailing from China to Chinese port to Indian port. So that time we will save. We can most of the Indian manufacturing, like the way China manufacturings are, like just in time kind of things. They get deliveries of raw material on a daily basis. Similar thing will happen in India. Solex has also diverted for a lot of product coming from Indian factories, and so that has reduced actually our storage requirement also, and it has increased our efficiency and working capital cycle as well. And top of everything, that 1 month sailing time, that has actually reduced. So that has increased our work efficiency as well.
Noted, sir. Thank you so much.
Thank you, Devendra.
Before we go to the next participant, we'll take the questions from the chat participants. I invite Anupam to ask his questions. Anupam, you can go ahead.
Yeah, hi. Good evening, sir. Thanks for your time. So I have two questions. First is that in the press note, I read that currently the capacity utilization was 85%. So for the second half, the March, the 6 months ending March, the sales was around 273 crores. So what kind of numbers can we expect in the first half at 100% capacity utilization?
First quarter or first half?
First half.
6 months.
First half.
So it will be around 400 around 400.
So we nothing. Around 275.
275, 300.
First half usually 275%, because there is only one production.
So first half, it will be around 300 crores.
Yes. So anything between
275 to
275 to 300.
Okay. And my second part of the question was that obviously you are saying that the EBITDA margins will improve because of the fixed cost staying fixed or maybe not moving up so much. So what I wanted to understand is also like the solar cell, if you are not using it for your own captive consumption and if you are selling it to someone else, so what kind of numbers that converts into, like if it is a 2 gigawatt solar cell plant, what kind of numbers that basically gets converted into in terms of top line? Roughly average, I am asking.
So solar cell line, as I said, like, we have just started working on this. It is just our intention that we have come up. Numbers we will, later date, we will come out with the numbers once we have. But right now we are holding it just and waiting for government to issue visa to the Chinese. That is the main deciding point. And if that is not happening, then we will further delay our cell line.
We have some alternate options, but they are in initial stage. So as in when, we are planning to go to China in July, and there are some developments. I think so. The first option that engineers coming from China is not happening. There are options that these Chinese suppliers, the big players, they have team in the other Asian countries. So maybe if they move team from their Asian part, their setups in Asia, maybe that can be a second option for us.
And also, while you had achieved 60,000 modules in a month, which was highest, so have you crossed that in the month of April or May, or still that number is the highest?
No, that number is still highest.
Okay, fine. Thank you.
Thank you. I have questions on chat from Mohit Jangir. His first question is, how much are we dependent on imports, especially from China, for our raw materials, that is solar cell, and how much is sourced locally?
I'm sorry, just say again.
What is our local sourcing for solar cells and how much is from China?
Okay, solar cells local sourcing is basically only for DCR. Otherwise, for non-DCR requirement, it is sourcing it from China only. And basically, if you want it in percentage, it is somewhere about 50-50.
Okay. And how confident are you on successfully commissioning the solar cell unit as sector leaders are still struggling?
No, so basically, I already explained the reason for struggling. So there is no rocket science for the cell manufacturing. Basically, it is a very known technology. It is only thing that expertise are not available in a current situation, and which we are hopeful to get it resolved from the July onwards once the new government is formed, and then. I mean, it is not that India has not set up cell line. Already, India is already manufacturing cells for so many years. So it is not that India cannot do that. Only thing is this new technology, N-type TOPCon technology, and the monoPERC. monoPERC is still happening in India. There are 4 factories already manufacturing monoPERC cells. Now the market is shifting to N-type TOPCon, which is again a new technology. So that is where the expertise are needed. And once we start getting those people coming in, India will go on a fast track. And same like we are also confident to run our cell line very efficiently. As I already said, like we can sell our product in open market, US market, and for our captive use also. So I don't think we need to go out to search for the market. If we are talking about 4.5 gigawatt of module, our own module line, and 2 gigawatt of cell line, then we are fulfilling only our 50% of requirement for our captive use. Though we will not keep the 100% utilization for our own cell, we will develop the market also for our sales. But still, it is lesser than what actual the requirement is. So once the environment is ready for this, we are confident that we'll be able to set up and operate our cell line efficiently.
His other question is, in long term, how would Indian companies survive without duties, as they may not be continued for too long? And do you see the sector getting commoditized?
Yeah, so basically what happens, with ALLM, there is no relevance of duty, because even there is a duty, if somebody wants to pay duty and bring it, they cannot bring it. So even if a duty remains or doesn't remain, it makes no difference. Now that is one answer. Another answer is, as I said, in the last 2 bid in a GIPCL tender, the Indian manufacturers have quoted lesser than the Chinese brand. So I think, that is the answer to your question now. We are very competitive in that way.
We'll take the next question from Ravish Mala.
Indian manufacturers have quoted price considering the 25% duty on sales and almost 10% duty on bill of material. So even in spite of considering, so much of duty, we are lesser than the Chinese brand.
Sure. We'll take the next question from Ravish Mala. Ravish, you can go ahead.
Sir, this is Ravish here. Sir, I want to ask you about your OEM brand again. You said 70% is OEM, 30% is brand. How we are doing accounting means how we are getting our revenues from OEM, and how we are getting margin, how much margin we are making in OEM and how much we are making in brand. And one thing is that, and another question is, we have clocked some 272 crore in S2, and you have told EPC for FY24 was 50 crore. So from total revenue of our 366 crore, 300 crore we have done through our solar modules only. But you said in next year we are going to do only 275 crore.
For a half year, for the half year 275 crore, the half year.
See, the first half we will have only one production line, and the one production line revenue, that is 275 to 300 CR. From September, October onwards, or maybe 4 months, that is December onwards, we will have another second line operational. So we will have a mixed revenue, the 6-month revenue from the first line and the 4 months revenue from the second production line. And that is how we will achieve the 800 CR numbers.
Sir, our margins in OEM and brands, different part.
It varies around 2%.
In OEM, it's 2%.
No, it differs between OEM and own brand. So it varies 2 to 3%.
It's a 2 to 3%. Okay. So, sir, again, one more question from my side. The same thing Mr. Jangir has repeated. Are we going to get it commoditized in next 2-3 years, or we will be having much more efficient solar cell or solar modules? So the continuation of the growth will remain in this sector for coming years.
Just can you repeat your question? Can you
actually, I want
something?
to know that everyone is expanding right now. Everyone is having module. So we are in commodity sector only. The solar module sector is a commodity sector right now.
Yeah.
But when we are getting towards cell manufacturing and maybe towards the silicon rod and cutting thing, but will it be possible to have these things which Chinese having since last so many years in 2-3 years? Will not it be commoditized for in next 2-3 years only?
See, basically, the way the demand is increasing, the capacity is also increasing, right? And then also we are unable to fulfill those demands. And this is a technology business, so which is changing so fast. So there is continuous upgradation also on this thing. So it is not that something that you have set up and then you are running it for continuously same thing for the 5 years, 7 years, 10 years. So there is always enhancement in terms of product. Now, similarly, like there is a requirement of 5 gigawatt for the repowering in India. What is repowering? Repowering is that those who have set up their power plant with the 250 watt peak modules or 300 watt peak modules, now they are placing orders for the high efficiency modules even well before the warranty, the life of the module. If we are giving warranty for 25 years, just within 10 years, people are replacing their old panels with the new one. So it is something where there are a lot of areas which are actually opened up for the solar modules. So I don't see any challenges for the overproduction or the blockage of market or the commoditization of this product. It's a technology business. So basically, yes, definitely there is a competition. So we have to work with a very thin line, but at the same time, efficiency and the output is something which is key. And that is the reason Solex has adopted this model. People like in India, they are shying about telling themselves OEM company, but we are professionally OEM company. And that is a difference, that within few months only, within 45 days, we have been able to set up our production line. Within another 60 days, we have been able to operate our production line in 3 shifts. And we are taking out more than 80% efficiency from our plant. So Solex will, in spite of so many players coming in, Solex will have also a different identity and role in the market because we are collaborating with our competitors. So utilization of factory should not be any problem, or the capacity should not be.
Last question from my side. I have noticed that SCCI has also given tender for modules. Like just I have noticed some hundreds of megawatts of modules is being procured by SCCI, not plants. So are we also, is this a new thing which SCCI is doing, procuring modules from the companies who are providing it? So again to it, are we also applying for those tenders, and are we eligible for those tenders, because the tenders are very big, 400 megawatt, 200 megawatts, or likes of that?
Yeah, so you are right. SECI and NTPC, both of them are adopting, working in a dual model. Some projects they allocate along with the module. Some projects they allocate to the bidders without modules. So module procurement is happening by these agencies, and the rest of the things needs to be done by the EPC companies. So we are also working with them to supply to bid their tender. We are already in one of our tender. Technically we are already qualified, and we are waiting for the commercial bid to come up. So I think that is a new method of business where they are blocking the capacity from the module manufacturer for their own requirement, and that is a good sign that we don't have to deal with 10 EPC companies. Rather than we deal with only one agency who is responsible to procure modules and payments.
Okay. So can I have a last question, sir?
We'll have to move to the next participant. We're
Okay,
running out of
I
time.
will wait in our queue.
Yeah.
Okay, thank you.
We'll take the next question from Ashil. Ashil, you can go ahead, please.
Yeah, hi sir. Thanks for your time. Quickly, just wanted to know a couple of things. One is, I've from the other couple of listed players, there are people who are similar size to you have a lower depreciation expense compared to us, or people who have a similar depreciation expense have a much larger top line compared to us. So just wanted to know, is there any difference between them and us, and why is it like this?
Yeah, in fact, basically, we are with this facility, we are in business for it's almost now 1.5 years, and other players are already in business for so many years. So the depreciation part is also in accordance, and the top line also will be accordingly.
Yeah, like to add, it depends upon we have been conservative, and it depends what residual life the management considers. So since Chetan Bhai has an experience of almost 15 years in this line of activity, and looking to the technical obsolescence and this, we have kept the depreciation ratio at higher compared if you compare with others. So you have taken less useful life. Actually, we'll have to check the exact numbers that not readily available. We can post you on that, but we have been conservative on considering the useful life. So it gives more better numbers and better idea to the management.
Okay, got it. And for this 800 megawatt order that this line that we're ordering, have we already placed the order or paid the advance or something? Where are we on that?
No, we are basically, we have already placed the orders. We have already finalized their technical contract, technical agreements, and everything. And I think very soon we will disburse our advance payment also to them.
Okay, we have any
The
timeline?
technical agreements are that is under process. So the commercially and technologically everything is decided, frozen. Now it is just because we are going for in fact compared to any other manufacturer in India, we have a different approach. As I said, we are going with equipment which are the next generation equipments, and that too with a 2 years warranty. That is something where we are mitigating our risk of foreign vendors not able to support this. So we are as Vipul Bhai said, we are a little bit conservative in every approach in selection of technology. So right now at this stage only we are going for a technology which is ready for HJT. So it requires a little bit more investment and focus, but at least we don't have to reinvest again and again for the entire plant. And this is high level automation with AI at every stage.
Sure. And when are we planning on paying this advance payment? Any timeline in mind?
This month itself.
Oh, this month itself. Okay, great. And so last question from my side, on the OEM sales that you do.
Manufacturing our production line. So, it is just a matter of it's a commercial clearance, that's it.
Okay, because if we are almost at full capacity already, just trying to understand why don't we just place the order and start the business,
We have already done that.
Okay, fair enough. And so last thing on my side on the OEM sales, do we have an idea on what are the main end categories in terms of our customers give for retail or utility or exports or what?
It's a mix basically. Every customer has a different requirement, so we don't go to their clientele. If somebody is doing OEM in my factory, we don't try to check where it is going.
Got it.
But generally, the DCR cell, they are used for government subsidy-based projects. So that you can say that they are going for all PM Kusum, then the Surya, this all schemes they are going for. So DCR is predominantly for government business, and non-DCR is for private, this.
Got it. And when there's a margin differential of 2%, just to put some numbers to it, would it be 9 versus 11%, number one, and number two, would the realization per module also just be a 2-3% difference between OEM and own brand?
In terms of net profit?
EBITDA margin or gross margin, however you want to guys look at it.
What we see is around 2% is the difference, the OEM and the own brand. But in that case, sometimes what happens, in case of own brand, the price fluctuation of raw material is always on us.
Yeah.
Whereas in OEM, the price fluctuation does not impact us. So it all depends on how the price of. If you see last year there was a sharp decline in price. Fortunately, that time we had less of Solex own brand and more of OEM, so it did not have major impact on Solex financials. A lot of other players, those who had huge stocks with them, they were more impacted. I don't know how it is reflected in their numbers, but so it is always it is a very dynamic market, and each and every month you have to take a call on profit maximization and capacity utilization. So,
and for the OEM revenue, the entire revenue is booked on our books, right? Like if we sell, if let's
yes,
say a module, yeah.
Initially in the beginning of the quarter, it was purely job work. The BOM and everything was supplied by them. So I think so 15-16 crores of job work, only it was pure job work income.
So basically we did 18 crore billing for job work in a previous year, whereas the value of module was 150 CR.
If the BOM was acquired by Solex, then then you could have seen
increase of 150 top line, increase of top line by 150 CR.
And that was in H1.
H1, H2 both.
Okay. So this H2 then, if we already did 280 CR in H2 of this past year.
Too money, Sorry.
So if it was an sorry, your voice is cracking. Sorry.
Can you repeat?
Yeah, I'm saying if this 150 crore was across H1 and H2, and in this past H2 we've done 275 CR, including this job working thing. So technically we should be able to do higher in H1 FY25, right? Because that BOM will come through you.
No, so basically it is 275 that is coming from the H1 25. It is from the 100% without having any job work. See, now we need to understand a decrease in the price also of a module. So that is also we need to understand, like, because that directly affects your this thing, top line.
Okay. And when you mention you have 9 to 11% EBITDA margin versus this half year was 7%, it was because of this drop in price, or what will change? Why will the 7 become 9 to 11?
We are targeting around 9 to 11, and obviously the sharp decrease in the price of cell, and that had also impacted the EBITDA margin.
Okay.
With the better efficiency and the utilization of the current infrastructure, manpower, everything, our target is to reach between 9 to 11%.
Okay, got it. Thank you, sir. Thank you for your time.
Thanks, Ashil. We started with Agastya. We'll take the last question also from Agastya. Agastya, you can go ahead, please.
Thank you very much, Vinay bhai. Sir, Farooq Saab, say what kind of agreement do you have? So you mentioned that he has invested in the company. So how much offtake will he have from your side? Are you going to be like
You were not audible in the beginning. Can you please repeat?
From your strategic tie-up with Farooq Saab, he has invested in your company. So how much will he offtake from you guys? What kind of production? Is there a firm agreement or rough understanding on that? Because he is one of the largest end users of modules today, right, in the country.
One thing I like to add, then Chetan bhai can take it. Chetan bhai and Farooq bhai are industry friends since last, I think so, 8-10 years. So it is more of personal, the investment what has come from Farooq bhai is more of personal, and now it is moving towards the commercial side. Chetan bhai can just show some light.
So basically, you are rightly said, like they have a huge consumption. They have already blocked their module orders with others for almost 14. I mean, till September. October onwards, we are discussing with them. We have not been able to arrive some numbers, but their intention is to give a maximum to Solex.
Great. That would be a great thing for you. A very credible guy taking a decent production from you. That would be great. One final question, sir. You mentioned that the EPC business will be shifted to another company, and you mentioned that it is a subsidiary. So it's a wholly owned subsidiary of the company?
76% will be held by Solex.
Okay, so it will get consolidated, right?
It will get consolidated.
So the FY26, no, not FY26. On full utilization, you guys were saying 1300 crores, 1300 to 1400 crores sales, and you did not include EPC in that, right? So by the time you reach those kind of revenues on the manufacturing side, how big will the EPC business be for you?
It should reach around something around about 300 crores.
And what would that translate into megawatts? How many megawatts would that be? 300 crores?
100 megawatt.
Sorry, sir, how much?
100 megawatt.
100 megawatt. Okay. Great, sir. There are many questions which remain, but I think we have run out of time. So thank you very much for your time, sir. Thank you. Thank you, Vinay bhai.
Thank you. Thank you so much. That brings us to the end of this conference call. Chetan bhai, would you like to give any closing comments?
So basically, as I mentioned in the beginning, we are very focused in a business, and the kind of relationship that we have, not with just with the customers, but with the competitors also. Like, I always prefer to work in a collaborative way, not only in India, but internationally as well. So Solex will have a different edge over any other companies. There are other companies also in a listed space, but our working style is totally different, and then we'll continue with our journey what we already had, that OEM and this thing, because that always ensures our that OEM is actually insurance for our capacity utilization and the constant margin. Whereas with Solex, the way other people are doing, you are always taking a risk of price fluctuation, because I still remember that in September the solar cell price was 12 cents and suddenly it came down to 4 cents, and that was a major hit for most of them. So I think it is always a balanced approach in terms of profitability, in terms of the utilization, in terms of the relationship also. So thank you very much everyone for joining us and having a faith in us.
Thank you, sir. Thank you to all the participants for joining on this call, and thank you to the management for giving us great time. That brings us to the end of this conference call. You may all disconnect now. Thank you.
Thank you.
Thank you very much.